Welcome to our documentary on the digital currency revolution. Today, we're diving into an extraordinary journey, exploring how the invisible waves of digitalization have reshaped the very concept of money and sparked a financial revolution that spans the globe. What is digital currency anyway? Imagine a world where your money isn't just a piece of paper in your wallet or numbers on a bank's computer. Digital currency takes that a step further, transforming money into a completely digital form that exists on the internet. It's like your regular money, but with superpowers. It's faster, it crosses borders without hassle, and it operates 24/7, all without the need for a middleman like banks. The magic behind this? Technology. Instead of being issued by a central authority, digital currencies rely on a decentralized system, offering a new level of freedom in financial transactions. Blockchain, the backbone of digital money. At the core of digital currency lies blockchain technology, a kind of digital ledger that's as revolutionary as it is complex. Imagine a book where you write down all your transactions, and this book is duplicated thousands of times across a network of computers. Every time a new transaction occurs, a record of that transaction is added to every book. It's transparent, secure, and incredibly hard to cheat. This technology isn't just the foundation for cryptocurrencies like Bitcoin. It's a new way of sharing and securing data that could transform how we do everything from voting to transferring property. Bitcoin, the pioneer of the pack. Now, let's talk about Bitcoin, the name that brought digital currency out of the tech shadows and into the spotlight. Born from the mind of an enigmatic figure known only as Satoshi Nakamoto, Bitcoin was a response to the financial crisis of 2008, a rebel move against the banking system's control over money. With Bitcoin, Nakamoto introduced the world to a currency that was limited in supply. There will only ever be 21 million Bitcoins, completely digital, and, most importantly, not controlled by any single entity. It was a wild idea, a form of money that relied on cryptographic proof instead of trust, allowing two parties to transact directly with each other, no banks needed. The early days of Bitcoin were like the Wild West, full of skeptics, digital gold rushes, and the occasional outlaw. But from these humble beginnings, a revolution was born. Altcoins and the diversification of the cryptocurrency market. Following Bitcoin's unprecedented success, a new wave of digital currencies, collectively known as altcoins, began to emerge. Ethereum is perhaps the most notable, introducing not just a new currency, but a whole new platform for building decentralized applications, dApps, and smart contracts. This innovation expanded the blockchain's utility beyond mere transactions, enabling everything from automated loans to collectible digital art, known as NFTs. Another example is Litecoin, often referred to as the silver to Bitcoin's gold. Created by Charlie Lee in 2011, Litecoin aimed to be a lighter, faster version of Bitcoin, offering shorter transaction times and lower fees, making it more suitable for daily transactions. Ripple, XRP, offers another fascinating case. It's less about being a currency for individual users and more about facilitating fast and low-cost international transactions between banks. Ripple's goal is to disrupt the traditional SWIFT system, making global finance more efficient. These examples represent just a fraction of the altcoin market, which has grown to include thousands of different cryptocurrencies, each aiming to solve unique challenges within and beyond the financial industry. Crypto mining, the engine of the blockchain. Crypto mining is an essential process that validates and records transactions on the blockchain. Miners use powerful computers to solve complex mathematical problems that, when solved, allow them to add a new block of transactions to the blockchain. This process secures the network and ensures its trustworthiness. Bitcoin mining, for instance, has evolved into a highly competitive and resource-intensive operation, often requiring specialized hardware known as ASICs, application-specific integrated circuits. Ethereum, on the other hand, has moved towards a proof-of-stake model with its Ethereum 2.0 upgrade, which doesn't require mining but instead involves validators who lock up some of their Ether as a form of security deposit to be allowed to validate transactions and create new blocks. Crypto wallets and security. Crypto wallets are digital tools, either software or hardware, that store the keys needed to access cryptocurrency funds on the blockchain. They come in various forms, including desktop applications, mobile apps, web wallets, and hardware wallets that store a user's private keys securely offline. A notable example of a hardware wallet is the Ledger Nano S, a USB-sized device that isolates the user's private keys from the internet, protecting their assets from online hacks. Conversely, software wallets like MetaMask offer convenience by integrating directly with web browsers, enabling users to interact with dApps directly. Security is paramount in the world of digital currencies. The decentralized nature of cryptocurrencies means users are responsible for their security. Phishing attacks, where malicious actors attempt to deceive users into revealing their private keys, remain a significant threat. Hence, education on safe practices, like never sharing private keys and using two-factor authentication, is crucial for anyone venturing into the crypto space. Use cases of digital currencies in everyday life and commerce. Digital currencies are expanding beyond investment assets to practical everyday use cases. For example, Bitcoin is accepted by various online retailers and can be used to purchase anything from electronics on Newegg to furniture on Overstock. Moreover, services like BitPay enable businesses to accept Bitcoin payments, bridging the gap between digital currency and conventional commerce. Ethereum has found a unique niche with its smart contracts that automate and execute agreements without the need for intermediaries. This functionality is pivotal in decentralized finance, DeFi, platforms, allowing for the creation of decentralized exchanges, DEXs, lending protocols, and more, exemplifying how digital currencies can reshape financial services. Cryptocurrency markets and investment dynamics. The cryptocurrency market is volatile yet filled with opportunities for investors. Platforms like Coinbase and Binance facilitate the buying, selling, and trading of a wide range of cryptocurrencies, offering a glimpse into the market's dynamic nature. The rise of DeFi has also introduced novel investment mechanisms, such as yield farming and liquidity mining, where users can earn returns by providing liquidity to decentralized platforms. The 2017 bull run of Bitcoin and the ICO, initial coin offering, craze serve as prime examples of the market's potential for rapid growth. Despite the risks, these events have shown how innovative funding models can emerge from the cryptocurrency ecosystem, offering new ways for projects to raise capital and for investors to gain exposure to new digital assets. Regulation and legal framework surrounding digital currencies. The regulatory landscape for digital currencies is complex and varies significantly by country. In the United States, the SEC, Securities and Exchange Commission, has taken steps to clarify the status of cryptocurrencies and ICOs, treating many as securities. Meanwhile, the IRS, Internal Revenue Service, views cryptocurrencies as property for tax purposes, illustrating the multifaceted regulatory approach within just one country. Globally, some countries like El Salvador have embraced cryptocurrencies, with Bitcoin being recognized as legal tender, showcasing a forward-thinking approach to digital currency regulation. In contrast, others have imposed strict regulations or outright bans, reflecting the challenges and concerns that governments face in integrating digital currencies into their financial systems. The future of digital currencies. The future of digital currencies looks vibrant and packed with potential. One key area of development is central bank digital currencies, CBDCs. For instance, China's digital yuan pilot projects have positioned it as a frontrunner in the CBDC race, aiming to revolutionize the way money is distributed and used domestically. CBDCs could streamline payment systems, making them more efficient and potentially reshaping global commerce by enabling faster and more secure cross-border transactions. Another future trend is the integration of digital currencies with the Internet of Things, IoT. Picture a world where your smart car pays for its charging or toll fees automatically using cryptocurrency, or your fridge orders and pays for groceries when you're running low. These scenarios are not far-fetched and represent the seamless economic transactions digital currencies could enable in a connected world. Impact of digital currencies on society. Digital currencies are already having a profound impact on society. For instance, cryptocurrencies like Bitcoin have offered financial inclusion to the unbanked populations in regions of Africa and Asia. By providing access to global financial systems through just a smartphone, digital currencies are opening up opportunities for wealth creation and management to those previously excluded. Moreover, the rise of decentralized finance, DeFi, platforms is democratizing access to financial services, from lending and borrowing to insurance and investment, without the need for traditional financial intermediaries. This not only reduces fees, but also creates a more equitable financial system. Sustainability and environmental impacts. The environmental impact of digital currencies, particularly those that require energy-intensive mining processes, has sparked significant debate. Bitcoin's energy consumption, comparable to that of some small countries, has raised concerns about its sustainability. However, there's a growing movement within the crypto community towards more sustainable practices. Renewable energy-powered mining farms are becoming more common, with operations in regions rich in hydro, solar, and wind resources aiming to lessen the environmental footprint. Furthermore, the shift toward proof-of-stake, POS, consensus mechanisms, as seen with Ethereum's upgrade, promises to dramatically reduce the energy consumption of blockchain networks. Additionally, the development of green cryptocurrencies that offset carbon emissions or fund renewable energy projects showcases the crypto industry's potential to contribute positively to environmental sustainability.